Okay, good morning, everyone. Looking at the US stock market, the Dow has again recovered from the 24,000 psychological level. Since then, it managed to break out above the 25,400 points. It headed towards the 25,700 level. However, after hitting the 25,700 points level, which also coincides with the previous resistance since the early of or mid of February, we did see some of the weakness on the Dow Jones, like on the US stock markets. The weakness was came about from the trade uncertainty between the US and also China, as well as the geopolitical risks in Turkey. So moving forward, we expect some of the mild weakness for the Dow Jones to for it to head towards the uh, immediate support level, which is around the 25,000 psychological level, to see how it holds there. If the 25,000 level fails to hold, then we might see further pullback on the US stock markets or the Dow Jones back towards the 24,000 psychological level. In the meantime, any recovery from now will be just limited towards the 25,700 points. Similarly, on the S&P 500, we did see the S&P 500 has earlier on a much higher towards the 2860 level, which coincides with the previous top since the early of this year. Subsequently, we did see the S&P 500 has pulled back. On last Friday, we did see a gap down formation as the S&P 500 falls about 0.7%. So moving forward, we expect further weakness on the S&P 500 towards the 2800 psychological level to see how it holds there. If the 2800 level fails to hold, then we might see further corrective phase on the S&P 500 back towards the 2750. In the meantime, any gains will be just capped towards the previous resistance, which is around the 2863 level on the S&P 500. On the crude prices wise, we did see some of the volatility on the crude prices after hitting the previous peak around the 75 US dollars barrel level. Since then, it has formed a dodgy candle and subsequently price pullback towards the EMA 120, which is around the 66 US dollars per mark. After hitting the 66, we did see some of the technical recovery on the crude prices towards the 70. Subsequently, they did not manage to breach above the 70 and pull back towards the 66 or the EMA 120 level again. And on last Friday, we did see crude prices has staged out the mild recovery pattern. So moving forward, we are expecting some of the mild or recovery on the crude prices back towards the 70 and to see how it holds there. If the 70 level fails to hold and it pull back, then we will see further consolidation phase between the 66 towards the 70. In the meantime, a fall below the 66 US dollars barrel level, we will see further pullback on the crude prices back towards the 63. Okay, some updates on the local front. The FMKLCI has earlier recovered from the 1660 level. Since then, we did see the W-shaped formation break out above the 1700. The FMKLCI continues to march higher towards the 1800. It managed to breach above the 1800 on last week itself, and subsequently, the fall-through buying interest was noted on last Thursday and last Friday. However, we are seeing some of the shooting star candle was being formed over the past couple of days. Given the weakness in the global stock markets in the US as well as the regional peers, we might see some of the mild profit-taking activities on the FMKLCI towards the 1780 or even towards the 1760 level before the next recovery was to resume towards the 1860 level on the FMKLCI. On the lower liners wise, we did see a good recovery pattern on the lower liners since the bullish engulfing candle was being formed in the early of July. Since then, it has recovered. It rejected the EMA 120 level and subsequently pulled back. And once again, it recovered, forming the short-term breakout. The pullback towards the EMA 9 level and the continuation pattern as the FM's market index has seen the follow-through buying interest beyond the EMA 120 level. The EMA 120 level proved as one of the key resistance level as well. Earlier, we did see the price has rejected the EMA 120. Once again, it rejected the EMA 120, and on last week itself, we did see the lower liners has reached above the EMA 120 level as well. So moving forward, we are expecting further recovery or further rotational play on the lower liners should there be a breakout above the 15,200 points level to see further upside towards the 16,000 psychological level. But in the event that we are seeing a reversal pattern from the 15,200 points, then we might see further pullback or further consolidation back towards the 14,500 points level on the FM small cap. All in all, the FM small cap index is forming the good recovery pattern over the short-term period. The MA9 2016 is in line at current juncture. Some of the stocks that we can watch out for firstly would be Maxis. The key index was being supported very strongly over the past couple of months. Maxis has recovered from the 5 ringgit and 21 cents level. Subsequently, price has been trading on a sideways pattern between the 5 ringgit and 56 cents towards the 5.79. And on last Friday itself, we did see a good bullish engulfing candle was being formed on Maxis as price attempts to breach above the 5 ringgit and 79 cents level. So for now, we need to monitor for the breakout above the 579. Should there be a breakout above the 579, we might see further upside on Maxis towards the 599 or even towards the previous peak around the 6 ringgit and 14 cents level. The stop loss point will be located below the 5 ringgit and 56 cents on Maxis. On indicators wise, everything appears to be quite positive right now. As you can see that the MACD line has been pointing upwards. The MACD histogram has really turned green on last Friday, whereas the RSI continues to maintain its stance above the 50 level over the past 1 month trading period. On Luxchem wise, we are seeing a good recovery pattern or a bottoming out formation from the low of around the 58.5 cents level, forming double bottom formation. Since then, we did see Luxchem has recovered. It pulled back and subsequently made a short-term breakout, pullback, and the continuation pattern. So for Luxchem, we need to monitor for this short-term triangle formation breakout above last Friday's high, which is around the 68 cents level. Should price breach above the 68 cents, only we can confirm that price could be heading for the further recovery towards the 71.5 cents or even towards the 77.5 cents level. The stop loss point will be located below the 65 cents level on Luxchem. Following pullback and continuation pattern with accompanied by some of the improvement in volumes, we are seeing the MACD indicator has really issued a buy signal on last Friday, whereas the RSI also has been maintaining its stance above the 50 level as well. On Prolexus, price has again recovered from the recent low of around the 54.5 cents level or 55 cents a level, forming the double bottom formation. Since then, we did see price has made a short-term recovery. It rejected near the EMA 120 level and subsequently pulled back and traded on a sideways manner. So for Prolexus, what we do is we're going to monitor for this short-term symmetrical triangle formation breakout above last Friday's high, which is around the 67.5 cents a level. Should price breach above the 67.5 cents level, then we can trade pre-Lexus towards the 72 cents or even towards the 77.5 cents level. The stop loss point will be located below the 63.5 cents should price breach above the 67.5 cents level on Prolexus. Should price breach above the 67.5 cents, we could anticipate for the RSI to breach above the 50 level, while the MACD indicator could be issuing a buy signal should price breach above the 67.5 cents. On INSAS, price has been a strong recovery phase from the 73.5 cents level towards the recent peak of around the 92.5 cents. After hitting the 92.5 cents, we did see price has staged a mild pullback and traded on a sideways manner. But on last Friday itself, we did see a good gap up formation as price managed to breach above the short-term consolidation above the 90.5 cents level. With the short-term breakout above the 90.5 cents, we can trade INSAS towards the 92.5 cents. That will be the intraday target. While a breach above the 92.5 cents, we'll see price continues to head higher towards the 97.5 cents or even towards the 1.03 cents level. The stop loss point will be located towards the 88.5 cents level on INSAS. Last two companies for today will be Greenview Berhad. Greenview Berhad could be on a bottoming out formation phase. Price is still on a downtrend formation, but we're seeing some of the bottoming out formation from the recent low of around the 15 cents level. Since then, we did see price has been traded on a sideways manner. But on last Friday itself, we did see price has staged a gap up formation and closed above the EMA 60 level, accompanied by some of the mild improvement in volumes. With that, we could expect further technical rebound on Green U Bahat towards these 18 cents. That will be the immediate target price for now. Should price breach above the 18 cents level, further upside will be seen towards the 20 cents. The stop loss point will be located towards the 15.5 cents level should price hit the 18 cents on Green U Bahat. Everything appears to be quite positive right now on this penny counter. As you can see that the MACD indicator has been slowly been creeping higher. The MACD line has really risen above the 0 level on last Friday, whereas the RSI continues to flirt around the 50 level over the past 1 month trading period. Last company for the day will be UGTech. Earlier we did mention on UGTech for this trendline formation breakout. Subsequently, price head towards near just 1 cent below the 3.18 cents, which was our first target price. And on last Friday itself, we did see a good bullish engulfing candle was being formed, accompanied by some of the rising volumes. So for now, we could expect price to hit the 3.18 cents, and once the 3.18 cents level were to be breached, further upside will be seen towards the 335 or even towards the previous all-time high at 357. The stop loss point on UGTech will be located towards the 2.99 cents level. The uptrend in that orientation formation was also recently re-established. The MA9, 2060 and 120 has been in line on this counter. If you have any questions, you can put in the chat box and I'll reply you shortly. Recently, earlier we did mention price X could be heading towards the 2.02 cents level. It managed to breach above the 2.02 cents, accompanied by some of the high volumes being traded. So this could be some of the climatic volumes that we are seeing a potential pullback pattern over the near-term period. So for now, if you are still in this position on this company, it's best to lock in your profit for now, and price could be hitting could be staging a pullback towards the EMA 9 before the next recovery were to resume towards the 2.20 cents. So for now, we are expecting some mild weakness to occur towards the 193 before the next recovery were to resume. But once price breach below the 1.93 cents, then you have to lock in your profit immediately or cut loss immediately. One is on the uptrend inter-orientation formation following the recent breakout above the 89 cents level. Price has hit towards the recent peak, which is around the 1 ringgit and 5 cents. After hitting the 1 ringgit and 5 cents, we did see a price stage a mild pullback just towards the EMA 9 and stage a mild recovery pattern. So for now, for Tambun, we expect some of the further consolidation between the 97 cents towards the 1 ringgit and 5 cents level over the near term. Until we can see a breakout of the 1 ringgit and 5 cents, only we can confirm for further recovery on Tambun towards the 1 ringgit and 14 cents or even towards the 1 ringgit and 18 cents level. So the immediate target price is at 114 towards the 118. Should price breach above the 1 ringgit and 5 cents, while should price violates below the 97 cents level, then you have to cut loss or take profit immediately on Tambun. If there's no further question for today, then we'll end the morning briefing. Thank you.